Hello and welcome to another update video about AGIX. The AGIX chart is still, or the current movement is still tracked as a potential wave 4 to the downside. In an ideal world, this wave 4 would be in already when it reached the 50% retracement level of the length of the third wave, because this is typically the maximum you want to allow for a wave 4. Anything below that, and to be honest, I have to take that level out because I don't see a clear setup anymore below the 50% FIB level, because it would become bearish below the 50% FIB level. Yeah, I mean, we had a reaction to the level, great. You know, you would expect the reaction to such a substantial Fibonacci retracement, but it has not yet moved really in an aggressive fashion to the upside. So the problem I have is that if we get one more low, it will break the 50% FIB level, and I will have difficulties to count that still as a wave 4, yeah? Which means that we will then have 5 waves down most likely, and I will have to consider this as the yellow wave 1, which could then still rally in a wave 2 in an ABC structure, may however never reach a new high, and could then break down completely. So that risk at least increases significantly after we've made one more low, because especially if it's a sustained break. So if we continue to move a little while below the 50% FIB level, it would be quite bearish. I have nothing bullish left. I mean, again, it can still recover then, but it might only be a corrective rally in this yellow wave 2 into resistance, and resistance is currently between 32.5 cents to 49 cents. We are still moving in this descending price channel, and AGIX has not been able to break out of this price channel to the upside. A breakout could send it to 22.3 cents next. So it would be quite a nice price move. And it might even from there create an inverse head and shoulders. That's very speculative. Left shoulder, yeah. Then you've got your head here and maybe even a right shoulder, and then the breakout to the upside. Now again, that's just sort of looking at traditional, more like old patterns, you know. But still, you know, it could go with the Elliott wave count. If, for example, this A wave will move here, then we get a B wave down, and the B wave might be your right shoulder, and then a C wave rally, okay? Or in a more bullish interpretation, it could be a 1-2 setup. That will all depend on if the 15.7 cent level holds or not. So again, you know, I don't see anything significant here that would be very bullish. In fact, it's just sort of consolidating below the trend line, and this move up was not very convincing, very choppy. We're hovering below the trend line. Yeah, but again, a break above the trend line could send us to 22.4 cents. It could be an interesting chart in the next few weeks or even days, depending on if we get a breakout with volume. Oftentimes, if you get a breakout over the weekend, you're not going to see much. So yeah, it's started to become a stable coin a little bit. But if we see a breakout, as I said, on the weekend, it's often a wasted breakout. You just don't have the volume and the sentiment to support a rally to the next resistance level. Now, so here's a little bit of wait and see. So yeah, especially since the last update, because the price has actually been frozen. I think the last update was here, and then we've just come down, retested again from below. And yeah, it's certainly not anything that is immediately bullish here. But it can move higher from here, still in the white structure, basically in the white wave 5, as long as we're holding the 15.7 cent level. It's just not something that's very convincing at this stage. Yeah, that's my update about AGIX. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.